Yo, what's up everyone? It's your boy Looney. Today we're diving into a question a lot of people ask, and that is how much premium can you actually generate with selling options and option trading? You've seen the clickbait with $1 million portfolio, selling options and how much they can generate. But I want to show you my portfolio because it is sitting at 50,000, and I'm going to show you what actually is happening, the good, the bad, and the capped. But before we get into it, I do want to do a quick shout out to the Discord community. It is free to join. And then I also offer premium perks or memberships that give you access to one-on-one coaching. I do trade call outs. I do giveaways. I have an option selling course and more. You can check it out. All the links to it are in the description. But what am I doing right now? So the first thing we're going to go over is my covered calls. I run a lot of covered calls to generate that income on stocks like SoFi, Mara, and Riot. And right now they're deep in the money or in the money, and I had to roll them or actively are rolling them to avoid assignment. But by doing that, I am capping my upside and sometimes even having to pay to roll. So because of that, I am down on options. If we look at my SoFi position, I am up 52% or 2,300, but my total return is down 450. And that is because of my covered calls. And I didn't set these calls up in the money, but I had to roll them and I didn't want to roll them too high. So I did them at a reasonable amount. And doing that, I had to keep it in the money and realize some losses. Because if I go down here to roll it, I got paid to do this. I had to pay $60, but I had a realized loss of $380 to close this. And we'll see this trade once it closes if I'm gonna have to roll it again for a gain or a loss. We'll see how that goes. But you could see how this can go against you, how covered calls can work against you. And similarly, I have call credit spreads, and these are a more bearish strategy, and these are ones that you can't really roll, or it takes a lot more to roll it. So I usually just close these for a loss because these aren't big positions in my portfolio, but I do have a few open, and you could see that they're also not doing so great. So yes, you can lose money by hedging, but also we're going to get into the later strategies, the more bullish strategies, because I don't have only bearish option trading. I have a lot more bullish strategies like doing leap calls or cash secured puts, which we'll get into. But for this one, I'm probably have to close it for a loss, and I might even do a put credit spread to capture some sort of upside if SoFi begins to keep running up. And I opened the trade because I felt SoFi was a little too overbought, but we could see here that the market can pretty much act any which way it likes longer than you could stay solvent is sort of what the saying says. So we could see there that it can get pretty ugly with selling covered calls and call credit spreads. And I do want to show you my overall return. I'm up 33%. So despite all that, I am still green. So let's switch over to the bullish strategies. And that's the long leaps or the buy leap calls. And I'm going to show you also that I'm running poor man's covered call and what that is. But I have some long dated calls to sort of simulate owning the shares and actually realizing gains towards the upside. So I have this Riot $5 call, which is up 57% or 228. So if Riot continues to go upwards, my covered calls won't do so well, but at least my long leap, I can actually realize some gains. So Riot's a good example that I'm up 980 on the total return. And then even with options, I'm still green $22. So despite all that, I am still green with all the recent bull run. And same with SoFi. This one, I do have a long leap. I sort of opened this one at a pretty bad time. So I'm only up 19%. Still pretty good, but we'll see how things play out with that one. But I mentioned poor man's covered call, and all that is just selling a covered call against these leaps, which you could do because these are such long dated and high deltas that they pretty much act as owning the shares. And to do covered calls, you need to own shares. So I do have 4 covered calls on SoFi because I own 400 shares, but then I also have this $16 call, and that's because of that leap. And this one is still in the money, so I'm going to have to roll this one, and it's not in such a bad situation as the other one. because that's the way I set it up. Usually when I have these long leap calls, I do covered calls against them, but I try and do really low deltas so that the risk of early assignment is very low, which it still is pretty low to get early assigned because of SoFi isn't trading that much higher. I'd really be concerned if SoFi started going to like 25 or 30, then I'd be more in a situation where I'd have to worry about early assignment. But this one too, realized loss of $99. But we'll see. You can see here that I got actually a credit for opening up this trade, around $20 just to open it. And with all the fees, it is $19.92. But overall, we could see that covered calls can work against you, and these leaps are actually benefiting towards the upside. Now, the last strategy is cash secured puts. I have a bunch on Mara because I want to get my average cost basis down and I want to own the shares. But you can see that I'm up pretty green. I have a few open, and with this hot market, we're seeing that these are becoming less valuable, or you want them to expire worthless. So I'm up 74% on this one, and I might let these expire worthless. I might buy to close to realize some gain, but I do have some cash secured puts. It's a tough market to do cash secured puts because of how there's little volatility in the market. You want to be selling options when there's a lot of volatility because then the premiums are more expensive. But despite all this volatility, or the changing of high volatility to low volatility, we're going to look at my options. What am I actually making? So right now on this month, I'm down $700. So you can see that you could actually lose money selling options. And the past 3 months, I'm pretty much even. Year to date, I'm still up 10%. So despite all this month, I'm still up green, 11%. And on average, I'm usually generating anywhere from $200 to $500 on average. If we were to really average this 1,200 by 6, it's really like $200 a month because we're halfway through the year. So really around $200 a month I'm generating from options, which is really good, honestly. And overall, I'm up 10%. But if we go to my realized profits, and this is where you close options and you actually realize gain, those are the open options. But max, I'm up 23%, and year to date, I'm up 44%. So despite all that red you're seeing, and even that month where I'm down, this month I have a realized loss of only $20, and we'll see how that plays out because I might have to close a few for a loss. But past 3 months, I'm up 12%, and year to date, 44%. So on average, around $200, I'd say, on selling options. And it's sort of passive. It's not as passive as dividend investing, but it is pretty low management. And right now, with volatility being low, covered calls are just simply underperforming, and premium is dry across the board. And that's why I am stacking cash and just being very selective. I have 4,500 ready to deploy at any moment if the stock decides to crash, or the market decides to crash and we see some sort of news or some black swan event. I am ready to deploy it. And here's what I've learned in 2025. Covered calls do work, but until the market rips, then you're just chasing rolls, and you're gonna have to constantly roll, which is not a terrible place to be in, but it does suck to see that you could be making a lot more if you didn't have these covered calls open. Another thing is credit spreads are solid, but you've got to size it smart. You can't go all in on credit spreads, and you have to be very selective when you're doing them. And the third thing is that leaps are very underrated. Now, it's hard to open up leaps when the market is red, but that's really when you want to start doing it. I personally like to wait for some sort of support, or we're seeing that the market kind of turn around, and then I'll open up a leap. You can miss out on some gains doing that, but at the same time, the premium is less because the volatility is less, and you're not missing out too much by trying to time it perfectly. And the last thing is that cash is truly king, because when the VIX is low, the premiums are not great. So you want to wait till premiums get a little bit better so you could deploy that cash into a better investment. So is 1 million necessary to make real gains? Not necessarily. You can make pretty good gains with 50K. If we look at my month, I'm up 5% or 2,400, which is pretty good, I'd say. And really, you just got to stay flexible and protect your capital and just play the long game. And if you want to see my trades, join the free Discord. The premium is $8 a month for deeper access. I obviously have other options or paying options. But until next time, stay sharp, stay patient, and peace.